Mortgage rates are higher than a few years ago, but they've been quietly trending down. Meanwhile, home prices are starting to cool and inventory is slowly building. So if you're buying a home in Montgomery County, Maryland this year, this video is for you. Let's break down what's actually happening with rates, prices, and what that means for your monthly payment and strategy in 2025. As of the end of June, rates have continued a downward trend, according to Mortgage News Daily. That's welcoming news, especially after months of hovering near 7%. The latest data, it shows existing home sales rose 0.8% in May, higher than expected. Home prices have dipped slightly in April, down 0.4% month over month. Mortgage application submissions increased 1.1%, with refinance activity up 3%. Pending home sales jumped 1.8%, another sign that buyers are getting more active as rates softened. Inventory and months of supply are up, giving buyers a bit more breathing room at some price points. But it's not all smooth sailing because new home sales fell nearly 14% in May, and we're still seeing signs of a cautious economy with mixed jobless claims and a lower GDP estimate for Q1. So what does all that mean for your wallet? Let's look at the difference in monthly payments for a $500,000 loan. So at 3.5%, your principal and interest is around $2,245 a month. At 6.7%, it's closer to $3,234 a month. That's about $1,000 more per month, not included taxes, insurance, or PMI. But if rates continue dipping through July, like most investors are now predicting, that gap could tighten. So timing and strategy matters more than ever. But also think about it. You're not the only one waiting for rates to drop. So as those rates dip slightly, you can expect buyers swarming into the market. And what does that do? That drives up the prices as well. So having a very good strategy and the right team in your corner matters at that point. Here's what smart buyers are doing right now. A lot of them are deciding to lock in their rate or do the float strategy. So talk to your lender about locking your rate now with a float down option. So this means if rates drop further while you're under contract, you might be able to adjust your rate. Not all lenders offer this, so ask upfront. Another option is to explore adjustable rate programs. Explore adjustable rate loans. So if you're not planning to stay long-term, a 5/1 ARM or a 7/1 ARM, it could lower your initial payment and give you flexibility, especially with rates in flux. Look for seller credits. So homes sitting longer on the market could come with closing cost help or even rate buy-down incentives. These are great tools to lower your upfront or monthly costs without lowering your offer price. There are also great down payment programs out there. One of my clients recently bought in Glen Burnie, Maryland, and she got a $20,000 FHLB grant, which covered most of her closing costs. So if you're eligible, it could help you compete without draining your savings. Reach out and I'll walk you through who to talk to. So in Montgomery County, Maryland, here's what I'm seeing. Buyers are cautiously re-entering the market. Turnkey homes in popular areas, they are still moving fast. But we're seeing more room to negotiate. And because inventory is finally building, buyers are able to take a breath, compare options, and act when it makes sense. But hesitations still exist. Many are watching the Fed closely and are wondering if they should wait or move now. Bottom line, rates are still higher than a few years ago, but they're no longer climbing. And that's opening up opportunities. So if you're thinking about buying in Montgomery County, Maryland, I'm happy to connect you with trusted local lenders who are helping my clients navigate this new landscape. And whether you're buying now or just getting ready, let's talk strategy. I've got your back. Thanks for watching. Bye.